investors can time when they come in and then when they come out. But we who are running assets in this industry, we're long every day.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics as we continue our coverage in the silver world. And today I'm quite excited to be joined by 4 company builders who have been through the process of starting companies, gone through the cycles and the ups and downs of the mining world, which not always the easiest thing to do, but thought it would be a nice time to dig into the process of what goes into starting a company and just the different challenges that are associated with that, how things change as you go along the process, and excited to have 4 talented executives here today. So joining me are David Stein of Fortuna Silver. David, welcome on in.
Thanks, Chris. My pleasure.
It's good to see you again. And fortunately, we have back on the show Andrew Pollard of BlackRock Silver, who is out in Nevada and has a nice asset that he has been developing in the Tonopah West District. So Andrew, it's great to see you again. How are you doing today?
Thanks for inviting me back. I'm always surprised to get the invitation.
Well, it's always nice to have you here, and I think we'll have a lot of insight to share, especially as you've been moving your project forward. Also joining us is Jorge Ganoza of Fortuna Silver, who's been doing this for a very long time, comes from a mining family and a lot of experience, seeing a lot of the cycles and the ups and downs. So Jorge, great to have you back on the show and to see you again, and hope you're doing well out there today.
Yes, and a pleasure to be here today, Chris. Thank you for that.
Well, it's good to see you again. And also we have Gary Cope of the Belcara Group. His son is Steve Cope, who we've had on the show many times. Gary, we also had on the show one time last year. So another mining family on the show. And Gary, it's great to see you here as well. So how are you doing, my friend?
Doing good, Chris, and happy to step in for Steve.
Well, he's quite an expert, and it's always nice catching up with him and talking silver. So with that said, just perhaps to start, maybe if you could each share what led you to start a mining company, what got you into this as opposed to many of the other things you could do. And obviously you all have different backgrounds, but it would be interesting just for people to hear how you ended up in this position. And David, perhaps we'll start with you.
Sure, thanks. That's a great question. So I originally did my education, my post-secondary education in engineering, my geoengineering, and then I did a master's in geology. So I was educated with a very technical background, and then basically I entered one of the worst mining markets ever, and was finding it hard to get a job as a field geologist, and I ended up on Bay Street. So I started my career actually as an analyst, and I did that for quite some time and worked my way up the ladder there. And then I jumped over to the buy side and worked on doing various investment mandates, public and private, for several years after that. And fortunately, over that first sort of, I guess, 10, 15 years of my career, I was fairly successful. And so about 5 years ago, I decided I wanted to go out on my own and kind of, start something. Instead of make money for someone else, make money for myself. And so I really started Kuya initially as an investment for myself. And I invested and founded the company and invested in it early on in order for us to secure the rights to acquire the Bethania mine. At the time, it was a joint venture with the former owners. We ended up later buying them out once we went public. So that's kind of the origin. And what I really liked about that asset, of course, I had my choice of dozens of assets back in 2016, 17, when I was starting the company, of which to invest in. And just the Bethania project was just looked incredibly exciting in terms both of the geological upside and the chance to restart production really cheaply You know, I think financial risk and raising capex is one of the biggest risks we have in the sector, and it was back then 5 years ago. And so the opportunity to get something that could, you know, go back into production with relatively low cost was really, really enticing for me. So that was how I got into it. And it's really, you know, other than the market being you know, very, very up and down, and certainly down for the last 18 months, the thesis has played out more or less as I expected. We just haven't had the tailwind of the market to work with in the last year, 18 months.
Well, and that's certainly part of it, as we'll dig into. Although one question for you, David, way back when you started, did you have that desire one day to be running a company, or was it just that it evolved throughout that progression, and just as you were looking for something to invest in, that was when you decided to move over to that side? Or did you ever imagine back in the early days that this is the position you'd be in now?
You know what? I was fairly lucky with my, you know, my first job, which was at Sprott Securities, which became Cormark Securities, and it was a very young company in the early 2000s, and I was able to become one of the partners very early on. And sort of having that seat at the table, you know, even as sort of someone in my, at the time, mid to late 20s, I think got me really sort of enticed into, you know, into the opportunity of actually, you know, managing something, and it gave me the confidence, I think, to do it as well. So it was, of course, you know, it was as many years later, but that's sort of, I think, if I think about what the origins of my desire to be more of an entrepreneur, it's probably goes back to that time.
Okay, well, that makes a lot of sense, and thank you for sharing that. Andrew, could you tell us a little bit about your journey and how this all began, and whether you imagine you'd be running a company like you are today, and tell us a little bit about that?
Yeah, well, you know, lots of times people put deals together. It's because of inspiration. Me coming into BlackRock was out of desperation. This was a company that had been around for over 20 years, the typical sort of Vancouver, you know, name change, rollback, name change, rollback. But I actually came into BlackRock originally as an investor in 2018. I was a management consultant in mining for about 15 years before that. I used to help put together management teams. I ran an executive search firm, so I was always, you know, behind the scenes, making sure the right people were behind the right projects. And through that immersion in the industry, you know, I started taking bigger and bigger positions in company. And, you know, it was sort of funny because BlackRock, you know, I'm a headhunter, and generally my whole business is predicated on, you know, one thing, and that's management matters. I made some investments into BlackRock based off a project. I was myopic about the project they had, and I didn't really look at the team involved. And well, it was going south. So when I joined BlackRock, it was because it was about to get delisted. I mean, it was about $1 million market cap. 3 cents was the bid ask. If someone was willing to put up a bid, because the writing was on the wall, like it was going nowhere. And frankly, I put so much money into it, and so many of my clients had followed me into the deal over the last year and a half before that, that it was actually going to be, you know, reputational risk. You know, I couldn't let it fail. So, you know, it got to a certain point where I just said, if this is the best you guys can do, then, you know, give the company a shot. And, you know, it was a problem I felt I could solve. I just felt like the wrong people were behind the company, and a few small changes. Maybe I'll come in on an interim basis for a few months as CEO, build a board, and get the company righted. So when I joined the company in May of 2019, I mean, my first interview, I frankly said it was embarrassing to run a company like this. You know, this is not how this is not what I figured my first role would look like, coming into such a troubled, um, you know, so many skeletons in the closet that had to be cleared up. But within about a year and a half, I went about reconstituting the board. I knew we wanted to be focused in Nevada just because, you know, that's as good of a jurisdiction as you're going to find. And I knew I wanted to be focused on high grade opportunities. So I built a very Nevada focused board. You know, within 3 months of joining, the stock went from 3 cents to 30 cents. Within a year, we hit $1.60, and we're $150 million market cap because we built a good team. That new team was able to sort of slowly work our way out of the mess we were in, and we were able to generate a new opportunity. And that new opportunity is now what BlackRock's about. So, yeah, you know, either way, you know, as I said, inspiration or desperation, either way, I came in very motivated to not let this thing fail. And here we are, about 3 years later, we're 50 cents, and I'm pissed off about it. But at the same time, I mean, we've come a long, long way, and we're just getting started with what we're doing. So, but that's it in a nutshell.
Yeah, and it's interesting what you mentioned there, because it sounds like your background where you were consulting and already involved with management teams played in pretty directly. And has that been helpful as then you finally got the chance to put it all into action the way you would like to do it?
Yeah, well, listen, mining companies come down to two things: projects and people. With when I joined the company, just changing a few people on the board and bringing in a true explorationist in New Nevada, without any other news, we were able to go 10x, and that was just 3-4 months time. That was before we even started drilling our other project. A year later, I mean, it's a few small changes can have massive effects downstream. I mean, had I not come in, had I not brought on Bill Howell, to used to be head of exploration for Placer Dome in Nevada, and tied in down there, we wouldn't have had access to this Tonopah opportunity right at a time where the market had never hated silver so much as when we did that deal, except for maybe right now. So, I mean, getting the right people at the right time and doing the right things, and ultimately you'll hopefully get rewarded. I'm still waiting for that $50 silver I've been promised, but I expect we'll get there someday.
Well, it's something we'll touch on a little bit later, handling some of these market cycles where you have a bit of a boom bust pricing mechanism at times, but appreciate you sharing that. And it's been nice following your progress as you've been going along. And Jorge, perhaps you could talk about, again, as we've discussed before, you come from a family of mining background, but perhaps you could dig in a little bit about how you ended up choosing to do this and your journey with Fortuna.
Yes, I had little choice. It's 4 generations. My great-grandfather was in the mining business, my grandfather, my father, and we are 4 brothers, and 3 out of 4 are in the mining industry, right? The smarter one went on to do other things. But so it was, just natural for me to go in early into the industry. I got a mining degree and a geological engineering degree, basically. But the Fortuna story came about around 2004 when we forget, right? But silver was trading around $3.80.
Yeah.
So that's when we decided to go into silver, right? And get our hands on the right type of assets. And in the early days, it was 3 partners, big ideas and little money. Today we are a company operating in 5 countries, 2 continents, employing over 5,000 people that make Fortuna happen every day, right? So it's been quite a journey. I fully subscribe what Andrew said. No, it's about quality of assets and quality of teams, right? So, we have to be able to bring those 2 things together, no? And they are interrelated, no? So, yeah, for me, mining's been there forever. And as I joke, I see price swings and difficult markets, but as I say, we ourselves, we've been long 4 generations. So investors can time when they come in and then when they come out. But we who are running assets in this industry, we're long every day, right? We're running assets in good markets, in bad markets, in awful markets. So yeah, no, we just have to be able to provide good, strong optionality to our investors. Yeah.
Yeah, and Jorge, you mentioned the last time we talked, you have a 5th generation, part of which is looking at going into mining as well, right?
Yeah, no, I'm particularly proud of that, because I have four daughters. We ourselves are 4 brothers, and I have 4 daughters, and 2 out of 4 are interested in pursuing a career in in geoscience in the industry. So I am particularly happy about that, of course. But yeah, no, and yeah, let's see how they fare. But I see it as a family craft, like an Italian shoemaker or something like that.
Yeah, well, it's certainly, I'm sure it helped at times having that background. And back in 2004, I know when you're just getting started, you might sometimes wonder how things are going to play out. Did you ever see getting as far and having the company grow as big as it has become today?
I have to say that we always had big dreams, but I surprise myself at times of reflection, right? Because you work work hard, and there are times where you pause and reflect on where you are and where you want to continue going, or where you've been, where you're coming from. So I'm particularly proud about Fortuna and really the exceptional work that different teams, because companies evolve and teams change, and everybody, we don't have some of the key players of the early days today in Fortuna, but I'm so thankful and value so much that early input, early effort, and we have different team players today than 10 years ago, 15 years ago, and everybody comes in and it's just so dynamic, and the company's been evolving so much that we have always kept challenged, and that's also something key to keep everybody motivated and energized. We have always been challenged with a new project, with a new construction, with a new jurisdiction, with an acquisition, and that's been key also in keeping everybody engaged, right?
Yeah, I can imagine so, especially during quite a volatile price environment in those 18 years since then, which we will dig into. Although Gary wanted to get over to you and hear a bit more about how you ended up doing this, what led you in here, and a bit more about your journey.
I'm more of the desperation story too. I think it's I was a stockbroker and put a bunch of money into a mining project that ended up going astray. Management was in disarray, and I ended up having to leave the stockbroker and take a position in the company, and I ended up taking that company to the Manex Group, which was the kind of the remnants of the Murray Pesum group, which was Larry Page and Dale Corman and Tom Patton and a bunch of other guys with incredible experience and who've been extremely successful. And so I sort of got my training there, and then ended up sort of deciding to go on my own and started the Belcara Group, and took a couple of the key people that I had met along the way in Art Freeze and George Cady to well-known experienced geologists, and that's how I got started, and that's how the Belcara Art is still with me today. I think him and I have been together now 35 or 40 years, and now I've brought Steve in. Steve runs his own company, Silver Viper, it's I guess turning into a family thing. We're only 2 generations, but maybe Steve's son will come in behind him as well. But I've seen it all. I've been there long enough to see the good times, the really good times, and I've seen 2008, which was a really bad time, and all these things come and go, and we've always been boom or bust, and I think we're heading for good times. We just have to be patient.
Yeah, and Gary, what was it that gave you the inspiration at that time where you decided to go out on your own and start your own thing, which requires a bit of a different skill set when you're part of an existing team already? Was it just feeling the confidence that you wanted to do things your own way, or what was the spark there?
Yeah, I mean, I was down the list at the Mannix group. I was fourth or fifth, you know, as far as important people go. And I just thought it was time to be able to go out on my own. And Art and George were sort of in the same position that they wanted to do that. And we had an idea on where to start, and we were very fortunate enough to get a project in Mexico, a silver project that we took to 300 million ounces, and ended up in a bidding war between Coeur and First Majestic, and ended up selling that, and that you know, got everything going and sort of built our reputation, and hopefully we can do it again 2 or 3 times.
Well, I think you're well on your way to doing that. And one of the things that I think all of you commented on was that you do see some pretty big price moves, especially in the whole silver side of this. And wondering what it's like, Jorge, you were mentioning how for 4 generations you've been long silver, and it's one thing for investors, they can get in and out of the sector, but what's that like, especially the mental part of that, handling it, where I'm sure there are times when the price is down, can be more stressful. Gary mentioned in 2008 when we saw silver drop from 21 to 9. Imagine that's not always the easiest time to make it through, although perhaps build some character. And Jorge, we'll start with you. Any thoughts on what it's like going through that?
You know, I personally have an opinion, of course, about where silver price is or where it should be. But when I think about the business, I have to say that I'm very price agnostic. So, you know, I'm very boring. Sometimes when people invite me to talk about where the metals are going to be and where they should be, because again, I'm quite agnostic on prices, because my view is that, you know, we have to perform throughout the precious metals price cycle, no? And this is a cyclic industry. We're indexed to the commodity prices, and we have to focus on assets that can perform throughout the precious metals price cycle, right? So, you know, in fact, we should be focused on expanding our business in the down cycle, not when prices are going up. And that's very difficult and takes a lot of discipline, because investors don't care and become risk averse when prices are down, where commodity prices are down. And when prices start climbing back up again, everybody wants you to build a mine, right? And then you start facing bottlenecks. You are forced to overpay. That's when projects have to deal with delays. You face the bottlenecks of an industry where there is not enough, you know, manufacturing capacity for equipment. There is not enough training engineers, you know, with enough experience to successfully deliver the projects and all of that stuff. So really, if you think about it, the right time to grow is in the down cycle, not in the up cycle, but it's very difficult. It requires a balance, I have to say, because it's not always that you will find the support in your investor base, not right? Mm-hmm. Investors are more willing to support growth and the longer term initiatives when prices are up, and that's where it's most difficult for us to run the business. Perhaps on the stock market is rewarding, right? But if you look at the last cycle and all the CEOs that got their heads chopped off for overpaying and doing pricey deals, or even moving projects that today are sitting out there and really never got developed, right? Because, you know, you start doing some nonsensical things when prices are up and everybody thinks they're just going to continue to go up and up and up. It can be rewarding in the stock market, but I think as a steward of capital in a mining company, you have to be very careful, right? So I myself, we work more preparing for the down cycles than positioning ourselves for the upside. That's easy, right?
Yeah, I think that makes a lot of sense because when the price is down and people are looking to buy cheap, if you're prepared for that, certainly can put you in a good position. David, I know that you've experienced a little bit, and then as we've talked about before, being in position to expand a bit when others might be forced to sell something. What could you share about that and your journey seeing the price cycle the last couple of years since you've been doing this with Kuya?
Well, I mean, first of all, I think it's what Jorge said is, you know, is exactly right, and it is nice to hear that, you know, from a, you know, from a larger company, because, you know, intuitively it makes sense, but in practice it's very difficult, because now, you know, in the down cycle, it's exactly the time to buy things cheaply, but it's also the hardest to, you know, to get the capital to do that if that's required, or if you're using shares, it's you're doing it at a low valuation. So it's one of those thread the needle situations that I think is really tough to manage. But if you can do it, there's huge upside for your shareholders. For Kuya, I mean, what we've done really since our since listing is that we've made a number of kind of smaller acquisitions that, you know, didn't really dramatically, you know, cost us much in terms of cash or dilution, but we still think they're really compelling acquisitions to grow the company, whether it's acquiring more land near the Bethania mine in Peru. We've done that a couple of times actually. We've also acquired a second project in Northern Ontario as well for cash and shares last year. So we have done these things. They've been relatively kind of small, more in the tuck-in scale, but it is the right time to do it. I do believe that. I believe it's still a good time to be looking at things like that, and you know, I think we'll reap the rewards. I know it doesn't look like like there's very much value created right now, but I think we'll be reaping the rewards in a few years when you know, when the sentiment for our sector improves.
Well, that makes a lot of sense, and I think, like you point out, it's harder for people to see it now when the price is down. Jorge talked about that, and again, when the sector is in a slump, it's just, I guess that's the whole thing with investing, where it's a mental challenge to be able to see things like that. Although, if you can, that can go a long way. And Andrew, certainly you've seen a roller coaster in the silver price in the time since you hopped on board and took over BlackRock. What could you share about your journey there and how you've been handling that?
Yeah, well, listen, the best and the worst thing about silver is the volatility, and the volatility is a heck of a lot more fun on the way up than it is on the way down. You know, to put it in perspective, you know, we signed our option agreement for our Tonopah asset in March of 2020. Silver had been sold down from, I think, $20 down to $12 when we actually closed on our deal, and that was in the span of like a month when the world was shutting down due to COVID. Now, fast forward 3 months later, we started drilling it. By the time we had our first drill hole back, silver was $30. So it moved from $12 to $30 in the span of about 3 months there. And that, you know, so, you know, as I say, it was the best of times and the worst of times, because that was a hell of a time to put out your first drill hole. I mean, we added $100 million to our market cap in a day or two, but it was also a horrible time to put out your first drill hole because, you know, here we are, silver's, you know, trading around $19 right now. I mean, I remember in I guess it was March of this year, the day that Russia invaded the Ukraine happened to be the same day that I did a deal with Eric Sprott, and he was convinced that if silver were to go from, if it was going to break through $25, it was going to keep going. So we did this deal. Silver ran that day. I mean, it ran $2 or $3. It was wild. And then, I mean, it's that volatility. And, you know, after that, I think from April to June, silver went on like a historic losing streak, like 17 out of 18 days, red, 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 red. It hadn't done that since like the Great Depression. So, really, I mean, the fact of the matter is no one knows what's going to happen tomorrow or next week or the week after. There's all these black swans that are out there. But ultimately, what's nice about silver is there is a supply and demand. It's not just precious metal, and it's not just the industrial and the electrification and the solar side of things. It's both of them. And sentiment and emotion and everything drives these price movements. And when they go, they go. So here we are at $19. I just think, if you look at a lot of the big producers, this is below the price of, all-in sustaining costs at $18 for a lot of the big names out there. That's one of the reasons why I always wanted to focus on high grade opportunities. And that's what, we've been able to establish Tonopah as. We in 2 years, this isn't a new discovery, it's a rediscovery because we're going into established silver district that's shut down right around the Great Depression, no modern exploration. And we had one very simple proof of concept when we did that deal, and that's why the stock moved so much. And that was simply that the old timers didn't shut down because they ran out of ore. They shut down due to low metals prices in the 30s. And in about a year and a half's worth of drilling, we put out our maiden resource estimate back in May. Yeah, we showed that the old timers just in a year and a half's worth of drilling left 43 million ounces. And it's the highest grade undeveloped ounces in the industry right now. Since then, we've stepped out, we've done this, but the reason why you want to focus on high grade stuff is because good market or bad market, grade is king. That's where you make your margin, right? So having a high grade project like this, whether silver is going to be $15, every project out there right now is going to make money at $30. I mean, if they're not, I mean, they shouldn't even be in the discussion. But very few will actually garner attention at $15 and $100 oil. I think ours probably will. So that's why we've always focused on, planning for the worst, which is the volatility, and having a project that'll work in all of those. And, we're still just trying to figure out how big it is now. So.
Yeah, that certainly makes a lot of sense. Planning for lower prices and having some room for error. And then when we do go through those tougher times can be a bit easier to make it through. And Gary, again, you've seen your handful of cycles in the times you've been doing this. What would you share on that one?
Well, I agree with Andrew 100%. I mean, grade is king. If you can find a high grade deposit in a good jurisdiction, you're 95% of the way there. It's however, those are not easy to find, and the easy ones have been found in every metal. It's getting tougher and tougher to find a really good deposit, especially silver. I mean, primary silver deposits are one of the rare breeds, out there. It's and you look at some of the big silver companies. I have to apologize to Jorge. I'm not sure about Fortuna, but I do know Pan American, and Pan American is basically gone from being a silver primary company to a gold primary company, strictly because of the lack of primary silver deposits that are out there. And I wish we had. I mean, hopefully Silver Viper turns into a high grade silver. He certainly got some sniffs of some really high grade stuff, but he needs a lot more drilling and a lot more work. But it's interesting times, and as an explorer, it's tougher and tougher to find those deposits.
Yeah, and Jorge, would you like to comment on that? Because with your Seguela Gold project, you have been adding more of a gold presence in there, and how you've been balancing that along with the silver.
And I think Gary just mentioned something that is very precise. In the journey of silver producers, what you usually find is a company built on a good silver asset, but then trying to replicate growth with that starter asset, and continue funding growth, with keeping revenue above 50% silver, keeping silver with over 50% of contribution to revenue is very rare. If you look at today, there are a few silver companies with silver production above 50% of revenue, contributing over 50% of revenue. But there is the odd case, one or two, and then most of them production is not really meaningful, right? It's a small production coming from one asset. If you look at the journey of the more established silver producers, and just like Gary said, Pan American Silver, silver contribution to revenue for Pan American is around 30%. For Fortuna today is around 22%. Fresnillo, which is probably the what we would call primary producers, the largest of them all, silver contribution is also around 30%, no more, to revenue, right? So I think that's the conundrum for silver producers, right? So you can get your hands on a good silver asset, but if you want to grow your story beyond one asset and you embark in that journey, most of us end up diversifying into gold and embracing growth in gold with the same enthusiasm that we look at silver. And as you grow, we also, I think Andrew touched on the theme of volatility. It's very difficult to run a silver company with meaningful production, with silver above 50% of revenue, because of that volatility alone. I think when you are a more established company, you welcome the stability of gold in the revenue and having a nice, let's call it silver kicker in the revenue mix, rather than just because silver can have crazy price swings, right? And gold has those swings as well, but not in the magnitude that silver does, right? So when you are not only responsible to your shareholders, but also to stakeholders, employees, a mine is not something that you can just shut down, right? These days, no, it's not like a restaurant. So you welcome the seemingly lower volatility in gold as a bigger percentage of revenue, and that's why we see, we mentioned Pan American, and there are several others that as they grow in silver, they really become more of a gold producer.
Well, that makes a lot of sense, and certainly with the gold price a bit higher, I think has helped a lot of the companies out there, and good to see that you guys have picked up the Seguela Gold project and that things are going well there. But one of the other things that you mentioned as you're growing a company that comes along with that is that in addition to the geology and perhaps the specific business decisions, you also become a manager of people, which is a different skill set. And curious what that's been like. Jorge, why don't we start with you and just the process, especially with about 5,000 people now at Fortuna. That's a lot. I can imagine that could be a lot to handle sometimes, and I wonder what that's like as that's grown.
And I would even go further. Employees are a tremendous responsibility, but in the mining industry, we are all just being measured against such a heightened standard, and I fully subscribe to that. So it's just the complexity in stakeholders, right? So we have our shareholders, or employees, or neighboring communities, which again measure us against a heightened standard, government stakeholders. So the complexity of all of that, I tell you, over the last, it changes every year, but if I compare it to 20 years ago, the change is enormous, right? So we go back to the basics. Make sure I work with my C-suite is 7 people. I work really closely with 7 seasoned, experienced executives. We manage our West African region with a chief operating officer for West Africa, LATAM region with a chief operating officer for LATAM, senior vice president for technical services, director for human resources, our legal counsel, internal counsel. I mean, it's just a team of people. Fortuna is not about an individual by no means, by any means. It never was, right? I happen to have the responsibility, and one that I take very seriously, of course, of running a concert of people, right? But it's a concert. Everybody has to play, and I have a group of 7 individuals or CFO. I work very closely with them, rely heavily on them, and I always try to surround myself with people who know more than I do, right? It's complex, making sure that everybody is working with the sharing the vision of the company, the values of the company, working ethically, right? I cannot guarantee that within our 5,000 people, everybody is behaving ethically. I cannot guarantee that. But I can guarantee you that if I identify one, he will not be any longer with us. That's what I can guarantee. No? So we train, we make sure we have robust hiring processes so we can really aim to bring the best into the company. And again, 15 years ago, there was 3 of us. Today we're 5,000. So it's been quite a journey, and one that's been keeping us all on our tiptoes all the time. Yeah.
I sure could imagine, and it makes sense what you're saying about having a good inner circle around you to help put all of that together. And Gary, perhaps we'll go next to you, because in addition to running a team, you also have a family dynamic involved, which I could imagine would be challenging for some people, although obviously Steve is a pretty brilliant and grounded guy. But what has that process been like for you?
Well, I couldn't agree with Jorge more. I mean, we don't get anywhere near 5,000 people, but our core group, which we're strictly explorers, we're not we make no premise on taking a project into the mining stage. We don't think we have the expertise for that, and if we were going to make that decision, it would be a huge step forward to try and hire the quality of people that would need to build the mine. And so our model of the Belcarra Group has always been, our expertise is exploration. I think we're as good as anybody at the team of geologists, and our track record certainly would back that up. But people are so important. I think I'm fairly knowledgeable in the general sense out of all the different aspects of the business, but I'm certainly not the expert on any one of them. I mean, we rely on geologists, we rely on lawyers, we rely on accountants, we rely on IR people who are all better at their job than I would be. I'm just sort of the middle guy that tries to keep everybody functioning and the team moving in the right direction. But it's a challenge, especially in a down market. People aren't making money off their options or whatever, and with inflation, that you run into problems, and we work very diligently to keep the team together and on track. So but it's much easier with 15 or 20 people than it is with 5,000, I'm sure.
Yeah, certainly being able to interact with people a bit more closely, I can imagine, goes a long way. David, you've come from the analyst side, so a bit more cerebral thinking, and then now you're managing the company. What's that journey been like for you?
Well, look, in a lot of ways, it's been sort of a natural evolution of my career. I in between being an analyst and starting Kuya, I also did a lot of investing for other people as well, and so all of those things together have sort of, I guess, got me and got Kuya to where it is today. I think that the difference maybe is a little bit is that those first 9 years of my career, which I spent as an analyst, I got to really meet a lot of executives early on in my career, including Jorge, who sort of formulated my view of things later on. And I was able to do that in good and bad markets. And I believe there's more than one way to make money in the metals and mining space and to start and run a successful company. But I believe again, based on my previous experience, that if you can marry resource growth and production growth under the same umbrella, that's a sweet spot. That first of all, there's very few companies that are able to do that, and if you can do that, there's huge valuation upside, because it's not just about metal prices and NPVs of projects, but it's also about what multiples the market will pay for your project. And that tends to be all driven by their perception of your growth. And so if you've got a project that, that has an NPV of, let's say, 100 million, but you're not very good at demonstrating any growth potential, you're going to trade at a discount to that. But if you can demonstrate and get the market really excited about your growth, you're going to trade at a big premium to that. And then, so that's really the opportunity that I see in our space in general, and with our asset base that we have at Kuya. And then I think add a little the cherry on top is being in silver, because there are so few pure silver companies out there, that having that exposure to silver, again, it doesn't feel like much of an advantage right now, but I do know, and in the past 20 years, there are periods of time for several years where silver will be outperforming gold, and where it will be doing really well, and investors will be clamoring to get access to a good silver story. So when that happens, that's when you see silver companies trading at 2 and 3 times NAV, like we've seen Pan American and others trade at in the past.
Well, that makes a lot of sense, and certainly look forward to those times and appreciate what you're doing in the meantime while we handle what is. Andrew, again, you were consulting with a lot of executives, and now you're running the show. Has that been much of an adjustment or a challenge? Or again, able to draw on some of your skill set, but how does it feel to be the leader of the team now?
Yeah, well, listen, I've always, for 15 years, my whole business was predicated on, getting the right people in the right roles, and hopefully achieving big things. And we sort of proven that, in the sense of how quickly we were able to turn around the ship. Not often, it would have been a heck of a lot easier to do it if it was a new, tightly structured deal. But when I joined, there were 60 or 70 or 80 million shares outstanding. Everyone, multiple former projects, lots of investors that bought in along the way over the years, focused on different things, and no one to really unite it. But being able to build a tier 1 board, I mean, that's what I sort of set out to do first. I mean, even Jorge and I share a board member in David Lang, who happens to be the chairman of Fortuna. He was one of the people I brought on in my first year on board, and was a huge part of the growth and a part of us really kicking the tires on Tonopah to begin with. And being, I guess, a high growth and seeing the volatility in silver and knowing it, and being on the, in mining, there's exploration, there's development, and then there's production. We're an advanced explorer now. We've got a resource. We're focused on resource growth. Certainly, at the same time, we're now looking sort of at how best to develop it. And you need a different set of skills in the form of, engineers and different sorts of consultants. But knowing the volatility in that, in being a small company like us, it's not so much employees, but it's multiple different factions of consultants, and it's knowing which consultants to use, which not to use, which even down to such minute details as which assay labs to use and when. I mean, and that comes into, the control I have over that is hiring the right project operator. And we've got a great world-class operator in the form of our executive chairman, who happens to also be our head of exploration, in Bill Howell, who you know is put so many projects into production and made so many discoveries along the way in Nevada that it's hard to name. But having a brain bank, having an asset like that on the ground in Nevada that knows who to call, how to get to the front of the line, how to get grandfathered rates on drilling, that's the secret sauce behind it. So and then letting him do it, right? So I know what I can do. I manage the corporate side of things. I make sure we've got the right people, making sure the filings are correct, and dealing with the investors on a day-to-day basis. But letting the explorationists and the engineers and the QPs and all that do what they need to do at the project, and just having some faith there. So, giving the team that I do have control of enough rope to let run with, and hopefully they don't hang themselves.
Yeah, that makes a lot of sense. Certainly, where you have a lot of different people that have a specific role to fill, and if you know who is the right person at the right time, I'll bet will help things go a long way. And perhaps the last question we'll run by our panel today, that along those lines, but another one of those team members or groups is often how you interact with the community, which varies from jurisdiction to jurisdiction. But Andrew, why don't we start with you, and just if you could share what it's like making sure the community is on board, that you don't run into trouble there. Obviously, in today's environment, if project goes in somewhere and isn't respecting the local area properly, that can be a big problem. And curious how you've handled that and how that's been going.
Yeah, well, we happen to be in a really historically significant district. I mean, Tonopah is the second largest silver district in Nevada, second to only the Comstock Lode. And, it's about a 3-hour drive from Las Vegas to our project. And along that drive, you'll go through two other towns along the way. One is Beatty and one's Goldfields, and then Tonopah. And the highway literally goes from, 5 lanes at one point down to 1 lane. And it actually, like, there's a stop signs in these three towns you drive up. So our town, Tonopah, is there because of the silver mines to begin with. All of these towns are there because of the gold mines down there in Beatty and Goldfields. These would not be there had it not been for them. So I mean, driving into Tonopah along the highway, you'll see these massive old head frames. You'll see there's not one but two mining museums in the town of Tonopah talking about the significance of our project. And we happen to be on private land at that, so patented claims, meaning we don't have to deal with the federal government on anything. It's just the state and county and officials to go. In a small town like that of maybe 3,000 people, I think currently, having an influx of activity with the renewed, I guess, exploration potential that we've established in Tonopah, you see the real world changes that are happening. I mean, we were told that just because of all the consultants we've had through the town in the last year or two, just that tax revenue we generated for the town allowed them to repave the sidewalks on their main drag there. So, it's a very pro mining jurisdiction. Obviously, Nevada's about as good as it gets from that regard, but it's in their blood. I mean, there's that's why the towns are in the first place, and they're very excited to see the renewed it come back to life. So
Yeah, I can imagine they were generally pretty happy to see you back there, especially when that was a big part of the history. So you were welcome pretty openly there, and it's been going well, it sounds like.
yeah, no, it's been phenomenal. It's anyone in the mining business has been to Nevada, has probably stayed in Tonopah. You're on the doorstep of some of the largest gold mines in the Walker Lane. We're right by Kinross's Round Mountain mine, which produced 15 million ounces of gold. But what makes us so unique is just the 100-to-1 silver gold ratio we have there. And that's part of the reason why Nevada is known as the silver state. Everyone thinks of Nevada for the gold, but if you drive along the highway, you'll see along the highway, it'll say, "Welcome to Nevada, the silver state." That's its motto. It's a state because of the Comstock Lode. That's it helped fund the American Civil War. It's how they got their seats in the Senate originally, and Tonopah has allowed it to keep them there, I guess. So yeah, it's a history. I've got countless history books on Tonopah, and what's cool about it, these were all written 30, 40, 50 years ago. we're the first group to go back in since the 1930s, and you know we've proved our concept that the old timers left a lot behind. But what's really cool is knowing that there's going to be some new chapters written in these books. So yeah, it's just nice to be part of history.
All right. And David, obviously you're down in Peru primarily, where a bit of a different environment than Nevada, and obviously there's a lot of politics happening down there with the current government, and was reading last week about how there's people who are out there protesting. Some don't like the mining projects, and curious how you've been able to interact with that.
Well, yeah, I mean, first of all, Peru's I think a surprisingly big country for those who don't really know much about it. And the issues are quite varied depending on where you are in the country. Where we are, we're sort of up in the central Andes, where our project is it's in the heart of mining country. There's operating mines all around us, and you know we've been blessed with a very supportive community. Our biggest challenge early on was making sure that we were able to take over that relationship from the former owners and sort of make that seamless. And we've, it's taken us several years, but we've been able to do that, and the credit goes to, my COO and co-founder, Christian Naramayo, who's down there, lives in Lima, and his team, they've been able to manage that really, really well. And, and we've been able to, sort of win their support and get them to help us when we needed, their support for permits, etc. But it's something that requires work and communication every day. I think if you are open and communicating with your local community, no matter where you are in Canada, United States, Peru, South Africa, wherever, I think, it doesn't guarantee success, but it definitely allows you to identify any problems early and be able to, to work on them. And yeah, so honestly, the big picture politics with in Peru, we haven't really seen much impact on the ground in terms of our project. But again, I can't speak for all of Peru, because Peru is mountains, it's desert, it's jungle, it's farmlands, it's all sorts of things, and we're really in one little tiny part of it, which is up in the mountains in a very mineral mining rich area.
Okay. And Jorge, obviously you're down in Peru, Fortuna in a bunch of different locations, now in West Africa. And I know that you've been making sure that your company is quite involved. It's been impressive seeing some of the things you do. And I was watching Cooking with Kayoma last week. So what could you say about that and how you've gotten involved in the communities there that you're working in?
Well, we work in 5-6 jurisdictions at the time, in 5 countries, two continents, right? So as you can imagine, we see a bit of everything. And of course, socializing mine development, a mine project, no matter where you are, is key, and the first thing anyone should be doing, right? We deploy a serious and dedicated effort to that end. And what we try to understand is what is the development plan of that community, and how we can partner with them in helping them achieve their community objectives, right? And that's our approach. And we try to focus our efforts on sustainable development, education, infrastructure, and bear in mind that we traditionally work in areas that are quite remote, and in these developing countries, being remote usually means being I don't want to say forgotten, but left at the end of the queue, at the very least, with respect to state presence. Right. So a lot of these remote areas where the projects are lag seriously on health, education. And you know, the challenge is that sometimes we are asked to do the government's role, right?
Yeah.
And so of course we cannot do that. We cannot fill the shoes of the government. But when we look at our social responsibility in light of serious gaps on health and education, there are things we can do. And we try to understand what the priorities of the community are, working with them, and then contribute, right? First at the local level, of course, and then in some other areas we have like national partnership programs where we try to partner at the national level in some of these, you know, specific initiatives. But I go back to what I said at the beginning: the stakeholder map around the mine development, mine operation is large and complex, and it requires a lot of management and attention and resources. Yes, it does.
Well, it's been good to see that you've involved that community as one of the stakeholders, and have enjoyed watching some of the videos you have on your site about that. So appreciate you sharing that. And Gary, anything that you can touch on in some of the different areas you've been involved?
It's one of the most important areas. It's nothing can kill a project faster than if you mismanage the locals. And we've learned, and I've dealt in Bolivia, I've dealt in Mexico, I'm in Sweden now. Every place is different. One of the first things we have to you know, try and get the local population to understand is that an exploration company has no revenue. You know, they go after a company like Jorge and expect us to do the same things, but we just don't have the money. But it is amazing how little things can really build trust. Things like providing paint for the local school, you know, buying soccer balls or uniforms for the locals, you know, the teams. We always do that. We have 2 or 3 people always from the country we're working in. Also extremely important on doing local. We want Mexicans dealing in Mexico on the local scene. A, they speak the language, and 2, there's a trust thing that comes right off the bat, or a mistrust that we won't get because somebody like me walks in and tells a local ejido in Mexico that we're only going to pay him this, and we're going to, you know. It just doesn't work. You need locals dealing with locals. It's extremely important. In Mexico, you've got the ejidos, which is a unique situation, a mining co-op, if you want, that you need to cut deals with to be able to work on the projects and the property and explore. And those negotiations can be tenuous and take some time, but eventually you build the trust and build a friendly relationship. And we've been lucky, we've been able to do that. Extremely important. In Sweden, I have to deal with the local Sami people, the reindeer people. And they're anti-mining as it gets. But we and Agnico, over the 6 or 7 years we've had that project, have built an incredible relationship, as good as it could possibly be with them. And to the point where if another explorer or company comes in and wants to start exploring on some ground, they'll call us and say, should we let them? And it's extremely important. I can't stress. I think that's one of the most important things in building a company as you can get is how you handle the negotiations and treat the locals.
Well, I appreciate you mentioning that. I think a lot of people have seen what happens when things don't go well, and obviously that can be a challenge, and appreciate you pointing out just the importance you put on that. So I think that's helpful, as well as everything else you guys have shared today. And hopefully this will be a good insight to people watching at home, whether they're investors or whether there's someone out there who maybe one day wants to start their own company, just giving them some insight into all that goes into it. perhaps before we wrap up, for each of you, I have your website pulled up, and if you have any final thoughts you'd like to share on your company or any of the projects that you're working on, Gary, why don't we start with you?
Gold project in Sweden in Barsele Minerals, 2.5 million ounces, 43101, and we're in the process of negotiating and have been for some time to buy our partner out, who and the first question everybody asks is, why does Agnico want out? Well, Agnico has made they're perfectly situated to expand their company in Northern Canada, and that seems to be their primary focus, although I see they just invested with Teck in a project in Mexico. Great project, great people, great jurisdiction. And then as Steve's company, Silver Viper, it's an earlier stage exploration, but he's had some great success. He's building ounces in Mexico, and he's working on a deal which is under confidentiality, but you're going to read about it pretty soon, that he's just about completed. So a couple of good companies, and Oryx is also, we're looking at a new project for it as well. So.
Well, I appreciate what you're doing. I appreciate all the things that you've done in your career and the experience you shared with us today. So thank you, Gary Cope of Barsele Minerals, and which is part of the Belcara Group, along with Silver Viper. Andrew, perhaps any final thoughts as we wrap up here today, and I'll pull up the BlackRock Silver website.
Yeah, well, listen, we're still on the fun side of the Lassonde curve, I guess, in the grand scheme of things. We're now backstopped by some real high grade ounces in the ground. As I mentioned, it's easily the highest grade undeveloped silver project in the planet right now, and it happens to be on private land in Nevada. Right now, we've got 2 drills at site. One of them's drilling right behind a Burger King, where we've delineated about a 25 million ounce silver equivalent resource in that area. And the other side is stepping out a full kilometer beyond where the resource left off, which has effectively doubled the footprint of mineralization and is now focused on just adding ounces here. So as I said, we've got 2 rigs going right now, 24/7. They're going to be going through the year. They're focused on just resource expansioning and taking that start we have, that 43 million ounces at 455 or 445 gram per ton diluted grade, and making it bigger. And as I said, just picking up where the old timers left off and showing, they've left a whole lot behind here, because we keep hitting kilometers and kilometers away. So easy, straightforward, low proposition deal where we're effectively a call option on the price of silver, and we think we can add a whole lot of more ounces too while we wait for it to run again. So.
Well, I appreciate that, and it's been fun following your journey, especially now as you are out exploring again and increasing the size of what you're doing. So congratulations to you and BlackRock, Andrew, and thank you for joining us here today. Jorge, any final words of wisdom or thoughts or anything you'd like to pass along? Obviously, you have the Seguela Gold Project, which I know has been pretty active lately and moving forward on pace to first gold pour in 2023. Anything else you'd like to share with us today?
Well, just on closing, for the benefit of your audience, Fortuna has emerged as a mid-sized producer of precious metals over the last couple of years. As we've been growing the company, today we are set to deliver for 2022 around 400,000 ounces of gold equivalents. That's a silver gold equivalent. In the third quarter, we delivered roughly 101,000 ounces of gold equivalents. 73% of sales is gold and some 22% silver, and the balance is small byproduct lead and zinc out of our Peruvian mining operation. And as you pointed out, we have a most exciting development project we're constructing, we're building. The construction is 78% complete. It's the Seguela gold mine in the Ivory Coast. And once in production, that will be a flagship asset for the company. Séguéla has reserves for 10 years plus and will be producing in the range of 130, 150,000 ounces annually, as we can see it in the start, with all-in sustaining costs well below $1,000, right, per ounce. So, exciting times. We have growth in the pipeline. We have established meaningful precious metals production. We have a nice silver kicker in our revenue. We deliver around 6 million ounces of silver annually, 5.5 to 6 million ounces of silver annually. So we're in a great position. We have a sound, a strong balance sheet with over $140 million in liquidity available, low debt. So, I never seen the company as strong. And our consolidated reserves today, if we do a silver gold equivalency for our reserves, we are mining from a reserve base of around 4 million ounces of gold, right? So, I never seen Fortuna as strong and vigorous as I see it today, right?
Well, it's really a testament to what you've done over the last 18 years or so. And I say congratulations to going through those market cycles up and down and persevering. And it's exciting to follow the progress of Séguéla, which is going to be a nice project for you guys going forward. And just thank you again for all that you shared here today and all of your insight. And finally, David, perhaps you could share any final thoughts you have and anything else you'd like the audience to know today.
Sure. Well, look, as I mentioned very early on, I came at this first and foremost as an investor, and I think when I look back over the last year, especially, we've made some tremendous strides in Kuya to really de-risk the project and also grow it. And so the ways that we've done that include, acquiring additional ground around the Bethania mine that's very, going to be prospective for resource growth, where we know there's already vein targets, etc. We delivered our first ever resource estimate earlier this year, which was really positive. We also got our construction license for a new mill, and that's not easy to get in any country, and we were able to do that, and basically, so our mill project is fully permitted. We were able to make new discoveries at Bethania. We announced that in the first quarter. That's over and above our current resource. We were able to also put out a really strong PEA. And I think, even though the silver price has been a little disappointing, if you actually look at our PEA, you'll see our all-in sustaining costs would be in sort of the $10 to $12 per ounce range. So very, very compelling project. And, I think we have to sort of read the tea leaves with the market, see what the best way forward is now, given the big correction we've had. But regardless of what we do over the next few months, I think this is a tremendous buying opportunity. We've created a ton of new value here, and just because of the broader markets, it's not been recognized. So you're basically getting a better company today at a quarter or a third the price that you would have been paying a year ago. So that's sort of that's where I see Kuya, and obviously I hope everyone stays tuned and watches us grow over the next many years.
Well, I appreciate that, David, and appreciate all of you for joining me here today, Gary and Jorge and Andrew as well, and just to have admiration for what you're doing. No, it's one of the more challenging times in the price-wise, yet good to hear more about how you go through those journeys, how you handle the ups and downs. And hopefully this will be helpful for people so they have an idea of what goes into running one of the companies, a mining company or a silver company in this market. And thank you again for joining me, and great to see all of you today.